All right, what's up, Tycoon? Super excited for today's video. We're going to be taking a look at /ES. This is the S&P 500 futures, and we're going to be looking at supply and demand zones, going over them, and just showing you guys a way that you can use this to really day trade, and learn how to scalp. Okay, and especially when you do this with options, because the SPY is the most liquid thing there is to trade out there, right? So you can quickly get in and out of 10 contracts, 50 contracts, 100, 1,000, it just depends, right? But SPY is going to be the most liquid thing. So we're going to go ahead and take a look at the SPY options today. We're going to look at, exactly how much they went up if you got into the puts and the amount of money you could have made. And, we'll go over how, you can read supply and understand why it's going to fall out of there, and you're going to see demand. And today what we saw was the demand zone did not hold up. Okay, this is the beginning of the market here. We opened up, all right, we triggered some stop losses, right? We came out of demand because that's how the market works. Okay, there's market makers and there's institutions and hedge funds that they need to pull liquidity from the market. And a way for them to do this is going to be to trigger people's stop losses, right? So that tends to happen. We come up here, we rally into supply, all right, but there's no volume really, and we drop, all right, we consolidate, we come back in it, and eventually the whole basis is you're going to move from these zones, all right? Everything in the black here, this is kind of like no man's land. Okay, you don't want to be entering an exit in an area where there's not a supply imbalance or a demand imbalance, right? Because that's what's going to drive the market in one direction or the other. And these areas in between aren't too clear. They usually test one of the zones and then tend to make a reversal or something like that. So again, we came up in here, we consolidated right here in this supply imbalance until all of those orders were filled. And it drove the price down. We came into demand, but we already bounced in demand over here. Okay, so all those orders that were sitting there, they got bought up, right? So now you have to think, well, there's less demand now in this demand zone, right? There was enough demand in here to create an imbalance and drive the market up. Okay, but we fell back into this level, all right? And if you see, let me zoom back out, sorry. If you see, we tested those levels, we came in here, but there was not enough demand, and we fell back down to the next demand zone where we bounced. Okay, now if you want access to these supply and demand zones, I do post them quite frequently in the Options Trading Tycoons Discord under the Tycoon Analysis tab, where there's access to my analysis, right? But there's also 3 admin members who have been trading for years, professional traders, so you gain access to those as well. Now back to this chart. All right, we're looking here at the demand zone, we're bouncing, and it makes sense. Okay, the market closed and it was really a bloodbath today. I mean, down 3.42%. That's a big deal. That does not happen a lot. Now one other thing, okay, that's really important is volume. Okay, so we have the volume profile pulled up here. All right, this is a study that you can put on Thinkorswim or TradingView, most platforms, and it's going to show you the actual volume by price. Okay, what's known essentially as volume by price versus the volume right here. This is volume by time, so it shows you the volume at 3 o'clock, right? The volume at 3:55. Right, this is going to show you the volume at these price levels, and everything I just explained to you guys is going to be illustrated here. Okay, this is what I see, right? When I look at the chart, is everything I just explained to you. Okay, we came up in here, right? Because if we see here, there's a lot of volume by demand, by price in these levels in this demand zone. That is where it's the highest. Okay, and so that's why there's all this volume, and it's choppy and it's consolidating and dips below, and then it comes back here, and then there's a lot of volume. It goes above, it comes back in, a lot of volume. We drop back in at pre-market, open up here, and there's enough demand. There's enough demand of the volume side to pull up. Look at the volume right here at these price levels. Very low, right? It's more than half down, like 30% of the volume by price at these levels. So what that tells you is that, okay, well, there's more people hitting sell here And there's not really any buyers stepping in, right? We just saw all these buyers step in, right? We would want to see it, create more of a demand, but really there's just sell orders here, people taking profit. Okay. We drop back down, and again, the volume's high, but we've been in this zone for so long that most of that demand in this area has now been bought up. So we came back down into it. There was not enough demand. We dropped, we tried to bounce right here. And if you see, there's a nice volume spike by price at these levels. We tried to recover, but ultimately we failed. And so now this area is going to be a supply imbalance, right? So you'd come here, right? And you'd put it on your red thing, and you'll go to HSL and you'll put 50. So that way you can, it's a little bit transparent and you can see the candlesticks. All right. And boom. So now we know that, hey, this was, previously an area of a demand imbalance, but now it's turned into a supply imbalance. So we're going to see next time when we rally, whether or not supply and demand is going to take over. But that's basically it. All right. So you can actually look at the volume profile, and it's everything that we went over here and I explained in the beginning of the video is all right here. Okay. This is it, and this is the language that you need to be able to read. And if you need some help, hopefully this video was good, explaining some things to you guys and a little bit of how the market works. I do have some more videos like this, okay, some tutorials and just some more videos kind of like this, breaking down how to trade. We're going to take a look now at the SPY options, okay, because that's what I told you guys. So if you go to the May 2nd expiration, today's April 29th, and you right click the 415 strikes and then you hit copy, you can actually copy it, go back to your chart and hit paste. Okay. So you come in here, you hit paste, and it'll pull up the value for this option now. Okay. So what we'll do is we'll zoom in here and you guys can actually get a better sense of, just how much money can be made, especially on bloodbath days like these. I mean, if you were able to get in puts, it was very, very profitable today. Okay. From the lows to the highs, all right, was 655%, right? Now, these are extremely volatile assets when you're trading options, but if you start to understand truly supply and demand, and you understand that, all right, hey, these are where the areas of an imbalance is, and we're going to fall to another area, to another demand zone, right? To another area where there's going to be an imbalance in the opposing pressure, right, of demand or supply. So I mean, even if you're not a perfect trader, this is what I mean by like just scalping and stuff. You come in here and you catch this move right here. That's 30 minutes of a candle, 30 minutes, that's 80%, right? You come in here, you catch this move. All right, that's 50%. You catch this move, that's 100%. And then you catch this last move at the end of the day, that's 200%. And these are one day, right? This is not like some long swing trade or some buy and hold that took a year. This is something that, with all of those multiple entries we looked at, right? We'll go back to /ES because this is the SPY futures. So what you'll do is you'll just buy and trade things off of the ES, right? I like to chart the futures because the futures are going to, predict, and they're going to show you what the SPY is going to do. Okay. So yeah, so I mean, you come in here, you see we're in that supply zone. All right, you can go short, you can buy your put option contracts, and take some profit. Boom, when we hit the bottom of supply. All right, that's probably a 20 to 50% move right there. If you caught that, all right, you take some profit. You see we come back up a little bit. You wait till we enter back in a supply. And you could have entered here on the cross of the EMAs. Once we broke them, you could have entered right there. That was probably a nice little 10, maybe 20%. And or you can just hold, right? Because we're not, you can kind of look at these as like your areas of entries for stop loss and where to, where you want to be stopped out at, right? So let's say you enter right here around the middle. All right. That's would be about 42.80. And your stop loss would be just above 4,300. I would leave it out a little bit more, right? Because as we know, they do like to trigger stop losses and things like that. It tends to dip below these levels. You can have a stop loss around 43.10, something like that. And then you just try to ride the momentum down, sell when it's here, or, you can hold it until we drop into a zone. Take profit in the next zone is always my recommendation. or you can do something called a trailing stop loss, right? And a trailing stop loss is really useful, especially with options. Now, it does tend to a lot to, get you out of a play, right? Like you probably would have got stopped off right here if you would have seen we're coming down here to the bottom of this zone. You throw a trailing stop loss on, maybe -15, -20%, and you probably would have got stopped out up here when you could have held and came all the way down there. So there's many various levels to it. Okay, you can be a really confident trader and just buy here and hold for the whole day for the whole drop, and you would have got 600%, as I showed you guys earlier. Okay, that's if you were a perfect trader and you bought the dip right at the bottom and you held it up to the top. That was about 600%. Or as I showed you guys, if you just did a few little trades, some scalps, all right, anywhere from like 30 minutes to an hour, 5 minutes to 15 minutes, because even in 5, 10, 15 minutes, you can get 30%. Look at that. That's 16 minutes, 30%. If you would have held for an hour, that would have been 150%. I just went over this earlier, but 73%, 133%. So, just hopefully this is making sense. This is like my favorite thing to do is really just doing this, and it's so liquid. There's many different ways to do it, but this is definitely the best trading strategy I've ever come across. And once you really start to implement and learn a few more things, like how to read volume by price, how to read volume by time, things like the RSI, a couple indicators, maybe like the VWAP. You don't need much more, honestly, than supply, demand, and volume. That and the price action is going to give you everything you need, but you can use some things to help make some strategies and some things that would help you out on your own. Yeah, so that's it for the video. Thank you guys for watching. I'm out.